Thanks for joining us. I'm Marlon Bowling with a look at our ag commodity trade, and I appreciate you allowing us to be a part of your day. Boy, we sure love talking with you about our ag markets. This morning, before we open things up, USDA came out with their weekly export sales numbers, and in case you missed it earlier this morning, I wanted to recap some of these for you. Not a bad week at all on corn export sales here. We had a total of 1.01 million tons that were sold last week. And the trade was looking for something between 500,000 and 950,000 tons, so it actually exceeded that by a little bit. Not bad. On the soybeans, we had 1.33 million tons. The trade was looking for 800,000 to 1.4 million. So technically, I guess you'd say it was within the range of guesses there, but right at the upper end. Soybean meal, 197,900 tons. The trade was looking for something up to 250. So it was within the range of expectations there. Soy oil actually exceeded expectations. Trade was guessing 5,000 to 24,000, and we came in at 28,900 tons. And the wheat, only 251,100 tons. The range of estimates on the wheat sales last week ran from 200,000 to 550,000. Now, if you move to the next screen, we have grain sorghum sales reported last week. And they came in at 190,900 tons. That was actually down 63% from what we had the previous week, at least on the old crop portion of that. The old crop portion was 53,900. Now, we did have the majority, 137,000 tons of sorghum were sold for next year, the new crop. And so that's how that was divided up. Basically, a little over 2/3 of it went for the new crop. Upland cotton, boy, it had a tough week, and it came in at only 50,500 running bales this past week. That was a very, very low number, kind of surprising there. The old crop portion of that was 43,800. It was actually the majority, and that was down 35% from the week before. The number on rice, 21,600 tons this past week. That was down 13% from the previous week. But it was higher than what we had for our 4-week average, so there is that. Now let's take a look at our current prices. We'll get you updated on our grain trade. Right now on the corn, we have the September contract. It's just hanging right in there at $3.53 per bushel. That is now up 6 3/4 cents. And keep in mind, this is the day before we get USDA's crop production and supply and demand reports. They'll come out almost exactly 24 hours from right now. At the top of the hour here tomorrow at this time. The December new crop corn now 5 3/4 higher. We're trading at $3.60. Well, in the soybeans, soybeans started out a little weaker in the overnight trade, and as the Globex market got toward the morning hours, it actually started firming up, and we have been trading a little bit higher. We're about 5.5 higher now at $8.98. Therefore, quite a while it was over $9, and it kind of slipped down below that now. So $8.98 is the last trade. That's about 6 cents off of our earlier high from last night. We have November up 6 1/4 at 903.5. Now the wheat market has had quite a run here this week, especially in Chicago and Kansas City. September now 10 1/4 higher at 526 3/4. Started out very slow, but it took off once we got rolling today. Kansas City wheat today now 3 3/4 higher on September. That puts the price at 460.5. And in the Minneapolis trade, with the quotes provided by bar chart, we have September 1.5 higher at 524 3/4. We'll pause here. We'll come back and we'll take a look at our livestock trade. Surprising strength there all across the board earlier. We'll see if it's maintaining that when we come back. Earlier, we were talking about the grain export sales that came out this morning, at least the announcement from USDA. And they also included beef and pork export numbers. And the beef number had to be considered a disappointment to the trade, at least you would think. Only 9,500 tons of beef sold last week. 9,500, not even 10,000. And we had pork coming in at 31,500 tons. Now, that was a pretty okay number, according to most analysts. But that beef number made you kind of scratch your head a little bit. But then you get to our current futures trade, and, well, let's take a look. On the live cattle board, you have the August now 92 higher at $100.07. Somehow things just don't exactly seem to point to that, but you have October 87 higher at 104.37. On the feeder cattle market today, feeders, you currently have the August up $1.07 at 135.12, and you have September 85 higher at 136.52. On the lean hog market, lean hogs really getting with the program today, and look at August. It's up now $2.55 at 50 cents per hundredweight. October now up $1.85 at 50.65. Let's bring in Brian Hoops of Midwest Market Solutions and sort this all out. So kind of interesting trade here, Brian. We have just really bad export sales on the beef. You have higher corn trade today. You have a lot of heat moving into the plains. I guess that might be a positive, but boy, corn, it looks like it's really bouncing off of some support or something today.
Yeah, interesting cattle market, Marlon. You know, the futures are trading higher. The stock market is sharply lower and really hasn't affected the cattle market much of any. Usually it will, but there's been some cash trade on a dress basis in the north at higher money than last week. That's supporting cattle futures. And now we're hearing some trade maybe in the southern plains at steady money, but there's some talk that because of the heat, they're going to move these cattle up farther north where supplies look to be maybe a little tighter. And that is enough to support the futures here. Steer weights just came out while we were on hold there. They were up 6 pounds compared to last week. So, you know, you're adding a lot of supply in here. And this is a time where I thought maybe with all this heat, you'd actually start losing carcass weights. But the fact is we're gaining, adding additional supply. I think overall that's going to be a little bearish scenario. And you talked about demand earlier. Our exports were not very good for beef. We're more focused on domestic usage for our beef and shipping pork to China and other countries. That would be where the main focus is lying there, and that's the reason why the hog market has taken off and rallied because of good exports once again this morning.
Now, you and I were talking earlier, and yesterday we had cash cattle trade at between 90 and 95 and a quarter out in the plains. Most of it was around $95, and you were telling me this morning the bids are running 95. Is that right?
Yeah, so that's going to be fully steady with last week's trade. You know, and that's I think a supportive feature. But having a couple dollars higher on a dress basis, even more positive. Trade came into the week expecting we'd see cash actually start to work lower because we're past the key 4th of July holiday and there's really not much demand, kind of a slow demand trends right now until we get into that final Labor Day weekend, that final week of the summer where Labor Day demand picks up once again. But for the near term here, it looks like softer demand trends for beef, which should be weighing on the market.
Well, thank you, Brian. I appreciate that. Brian Hoops, Midwest Market Solutions in Springfield, Missouri. Christina, back to you.